Hello, everyone. This is your instructor Savira Sahe once again bringing you the second half of the chapter. What did I do? Sorry. Okay. So I'm going to go into slideshow mode. Here we go. All right. So we were talking about job order costing, and we are going to finish the chapter 4 here by doing a quick recap first and then the last two steps. So, first things first, remember the definition of job order costing system. We said that it is a system of costing which puts together direct material plus direct labor plus overhead applied, and it is used in settings where each customer order is different and needs to keep track of its own cost. Okay, remember we talked about four steps in this chapter, but before that, let us talk about total manufacturing cost. There are three types of cost which is coming up all the time, so we should recap. Direct material plus direct labor plus manufacturing overhead, in this case applied, is the total cost of each job. Okay, job order costing system uses manufacturing overhead applied, okay, as a part of the specialized system. Okay, now let us talk about the four steps that this whole chapter is made of. We covered the first two in the first video, and we are going to cover number 3 and number 4 today. Okay, step number 1 was to calculate predetermined overhead rate. Remember, because of the nature of this system, we cannot use actual overhead because we need to estimate it, since actual overheads are not known till the end of the year. So company typically uses some estimated overheads and divides it by some estimated cost base. Both of them are given to you in the question, but let us assume, because it's the most popular, predetermined overhead is calculated using estimated direct labor hours. Okay, this is the step we did last time. The second step that we did was to apply the overhead. How do we calculate applied overhead? Applied overhead is calculated by taking the predetermined overhead rate that we calculated in step number 1, okay, and multiplying it by whatever denominator or base that you used in step 1. Actual, in our example, direct labor hours would be used to determine how much overhead would be applied to each. Okay. The third one is to compare. Okay. What do we compare? We compare applied overhead that we calculated in step number 2, okay, with actual overhead. Okay. So just be with me in a sense and try to visualize this situation almost on a timeline. Okay, suppose this is the beginning of the year. Okay, predetermined overhead rate is calculated before the year begins. Okay, and applied here throughout the year. Throughout the year, applied overhead works. Okay, when the year ends, at that time the system churns out actual overhead, and we are in a position to compare the two. We compare applied overhead with actual overhead. Okay, so either we have applied too little or we have applied too much. If we have applied exact, then applied would be equal to actual and the story is finished, we all go home. But Typically, we will find a situation where we have either applied too little and we call it underapplied, or we have applied too much and we call it overapplied. Okay, I'll show you an example soon of how underapplied or overapplied is done. And the final step is called adjustment. Okay, so since you have been using applied overhead throughout the books and your auditor expects you to show actual overhead in the book, you will need to make some adjustments, okay, in order to bring your books from applied to actual number. These are the two steps that we have to cover in the second part of the video. I'm just going to erase what I have done here and move forward. Okay, everybody all right? So I'm going to continue with the bright furniture example. Recall that we had done first two steps of bright furniture here. So let's look at the data again. We are now expanding the example to say that the company, suppose, has two jobs, so that the idea of applying the overhead is a little bit more meaningful. Okay, you are given direct material and direct labor used by each job. Now, as before, you are given predetermined overhead, which is 120% of your direct labor. Actual manufacturing overhead incurred is also given to you. Question says that you have work in process inventory of $7,400 in job B, which means job A is finished but job B is not. Okay, finished goods inventory is zero, meaning goods are sold. Okay, question tells us, and it confirms what we are thinking, that job A is finished and sold for $14,800. Job B is finished, but sorry, is not finished, and therefore it is still there in the ending inventory or work in process. Now, it is saying the price at which we sold job A is 15,000. What does that mean? We will be able to calculate the profit on this job if we have to, because we know the cost, we know the sales price. Okay. We are given four things that we have to do. As I said, this is pretty much the summary of the whole chapter using these four steps. So although we have done the first two steps, we will quickly recap them so that you can maintain continuity and hopefully have a better understanding. All right. Now it says step number one, compute manufacturing overhead that would be applied to each job. Since we are already given the predetermined overhead rate, we don't have to do that first step, which is calculation of predetermined overhead. We can jump straight to the second step, which is called how to calculate overhead applied. Third step, how to figure out total cost of each job. Recall, this should be direct material plus direct labor plus applied overhead. Okay, applied overhead we will be calculating in part 2. Okay, and then we will do the two new steps, which is called how to compare and figure out underapplied and overapplied overhead, and finally, how to adjust the discrepancy between the two overheads. Okay. Also recall that we had talked about a manufacturing overhead account. I am going to quickly make you the manufacturing overhead account before I move to the actual slide. Okay. So suppose this is your manufacturing overhead account. Okay. Recall that we said all the actual overheads are here. For example, your rent is here, your utilities are here. So what you have here is a total of actual overheads on this side. Okay. Now, because you have a work in process account somewhere in the background and manufacturing overhead applied is going to show up on the debit side of work in process. Okay, it has to be that in our double entry system, manufacturing overhead applied cannot be debited or credited twice. So because it is debited here, it has to be credited here. So it comes from the credit side of manufacturing overhead account and goes to the debit side of this account. Now, if you look at the manufacturing overhead account, you can see that actual is on the debit side and applied is on the credit side. Okay, you can very easily compare and figure out if the overhead is underapplied or overapplied. Let me make this account again. Suppose I have a manufacturing overhead account where I have actual overhead of, let's say, 20,000. Suppose throughout the year, what I have applied to all my jobs together is, let's say, $17,000. Can you stare at this situation, people, and tell me if I have over applied situation or under applied situation? I hope your answer is under applied. Why? Because I have applied too little. Okay, that's one way of looking at it. Another is that since it is a T account has to have a total same on debit side and credit side, correct? And since my credit side is too short, too small, I need to add $3,000 here in order to balance the two sides. You see that? Now I have already credited something in this account. Once again, keeping the spirit of a double entry system, I should find a corresponding debit to make this adjustment. Okay, let us take one more example of the same situation where our overhead would be over applied. Let us say I have a manufacturing overhead account one more time. I have actual overhead here, which is 20,000. Okay, let us suppose my applied overhead throughout the year turns out to be $24,000. Can you stare at the situation again and see if your overhead is under applied or over applied? Do you see that it is over applied this time? Because I have applied too much. Remember, your actual overhead is the real number that your auditors are going to hang their hat on. Everything else is estimated applied, doesn't matter. Okay. So now you have a situation of over applied. As I said, another way of looking at it, the total of both sides has to be the same. This time I make a total of the bigger side first and then say, okay, in order to have the same total on both sides, I need to add $4,000 to the debit. Okay. What does that mean? I have already debited manufacturing overhead account. What does that mean? I have to find something, some account, which I can credit with $4,000 to make a complete double entry system. Okay, all right. So that is generally the background of the next two steps that we are about to undertake on the next slide. Continue. Okay. I just copied all the information and the questions that the previous slide has so that you have all the numbers when you start solving. Okay. Remember, the first one is easy peasy. You have done manufacturing overhead applied for each job. So let's tackle the two old questions first and then we'll do the two new questions later. Okay. How much is the amount of overhead applied to each job is apparent here, where we say applied overhead is simply 120% of direct labor, right? If my direct labor is this much, okay, I say 120 or 1.2 of this, okay, is going to be my direct labor. Similarly, 1.2 of this is going to be equal to 2400. That's how I apply the overhead. Everybody with me? Second question, total cost of each job, direct material, direct labor, applied overhead gives me a total of this much for job A, okay, which also tallies out because I'm given that number anyway. Okay, this job has a number of 7400 also given to you. Okay, so if all your numbers are correct, your total is going to turn out to be correct. So you are done with applied overhead and you are done with figuring out what is the total cost of each job. Remember, this one is sold. Okay, this one is still in my ending inventory. Okay, so if the question, for example, asks you what is the value of ending inventory for work in process, then this is your answer. If the question asks you what is the value of cost of goods sold, then this is your answer. You get it? Okay, all right. Let's declutter the slide a little bit and continue. Here is the one second. What did I do? This is where I was. And then I go to the part 3 and part 4 of the question. And I think my animation kind of messed me up. Okay. I wanted to do the third one, but my fourth one has. Oh, sorry. Yeah. So this is just the total cost of each job. All this is the previous information. This is all old information that I needed. This is a solution that I just did for the cost so that I have job so that I have all the numbers. Now I'm ready to solve underapplied or overapplied. Okay. So remember, the total amount of overhead that I have applied is this plus this, right? The actual amount of overhead that I have is given to me in the question. So remember, I am comparing. Okay. Since you have seen this in the setting of a T account, I'm going to help you compare like that. 7800 of actual is here and 7200 of applied is here. Hopefully, it's a little easier for you to now see that in order to make the total on both sides to be 7800, okay, I have very little room, but what is clear is that I need to put $600 on this side, okay, which means overhead was applied too little. What does that mean? 600 is under applied. You see that? That is the most important determination in part 3. Not only calculating the difference between actual and applied, but giving it a sign. Is it under applied or over applied? Once again, if you applied too little in comparison to your actual, then you have under applied. Okay, so we are dealing with the situation of 600 under applied at this point. Okay, let's continue. Fourth question is to write off. I copied the question again. I gave you the amount of applied overhead that we had calculated so that you have the easy reference. I also gave you the amount of under applied overhead that we calculated in part 3 so that we have all the numbers ready when we are ready to solve part 4. Okay. Now, part 4 is basically saying I have to make an adjustment using two options. One is write off to cost of goods sold. I'm going to deal with this one first. What does that mean? It says that some companies prefer to take the entire underapplied or overapplied overhead and adjust it to cost of goods sold. Okay, I want to make that account one more time, manufacturing overhead account, so that you can see what we are doing. Remember, your actual is on the debit side. I keep making it over and over so that if you watch it or you make it yourself, you would be very, very comfortable with saying actual overhead is on the debit side and applied overhead is on the credit side. Meaning, in order to make the total same on both sides, I need to add $600 here. Correct? As I said, if you are adding $600 on the credit side, you need to debit an account. What account should be debit? Okay. My question number one is saying debit cost of goods sold. Okay. Why is it saying that? Once again, very briefly look at your flow of accounts. Suppose this was your work in process account and suppose this was your finished goods account. Okay. Let's not worry about beginning and ending inventory. Okay. Suppose your total manufacturing cost, okay, was $10,000, which involved $7,200. Let's just write that $7,200 of applied overhead. This applied overhead went to cost of goods manufactured. Cost of goods manufactured went here, and then it was sold, so it became cost of goods sold. After the year is over, you realize that that number actually, I lost my cursor. This number by mistake is 7,200. Number should have been 7,800 because actual overhead is always the correct number. So instead of correcting it here, correcting it here, correcting it here, correcting it here, I just correct it here, which means I add $600, which means I debit cost of goods sold. Oops, sorry, too much in a corner. $600 to adjust my account. Okay, so this is essentially to say that if you are doing an adjustment to cost of goods sold, all of it, okay, then if it is underapplied, okay, then you add. It's something you can cram, it is something you can understand, but it is very important for you to realize that whenever overhead is underapplied, you add it to cost of goods sold. Whenever overhead is overapplied, you subtract it from cost of goods sold. Let's take a look at it one more time. Okay. So what do we have here? I need a brighter pen. This is the balance of my work in process account given to me in the question. Okay. This is the balance of my cost of goods sold account given to me in the question. Okay. Ending balance of finished goods somehow is zero. So I don't have to worry about that. I don't have. Okay. So what is my step number one? Whenever I'm given a question like that, okay, my step number one is to make a total of all ending balances, ending inventories. Okay. I have three types of inventories, 1, 2, and 3, and I make a total. Okay. Finished goods is zero, so it doesn't contribute, but I have a total. This is the step number one. Okay. Step two, calculate a ratio. Okay. Our question is saying make all the adjustment to cost of goods sold, which means make 100% adjustment to cost of goods sold. Do not assign anything to work in process. This one we can't even assign because it is zero. Okay. So all the 100% of the adjustment would be made to cost of goods sold. Okay. What is 100% of the adjustment that we need to make? Total amount of underapplied overhead. So what do we do? As I said, underapplied means add. You add it to cost of goods sold. Okay. So I want to show you the clean version. This amount is the unadjusted balance of cost of goods sold. Unadjusted. And this one, after adding 600, is the adjusted balance of cost of goods sold. You with me? So, in one sentence, what are we saying? If the question says show adjustment using write off to cost of goods sold, and you are dealing with under applied overhead, then you just add it to cost of goods sold, okay, and you are done. Sounds good? Notice that it did not disturb anything else in any of the other accounts. We simply wrote it off to cost of goods sold and we are done. Okay. Now we go to the second one, which talks about proration. Proration means calculate a ratio in which overhead applied or over applied or under applied, as the case may be. Remember, we have a case of under applied. Okay, how it should be distributed to several accounts. Okay, once again, this is still your step number one, make a total. That doesn't change. Okay, what also doesn't change is step number two, which is to calculate a ratio. How do you calculate a ratio? You take balance of each account, you divide it by the total, like I did here. You take a balance of each account and you divide it by the total, like I did here. This one, I don't have to worry about it. Why? Because my balance is total. Total 0 divided by anything is going to give me a 0, so I won't worry. Also, always make sure, because you are doing it in an exam setting, okay, when you calculate the ratio, the total of the ratios turns out to be 100% to make sure that you have not done a calculation error. Okay, so all 100% is now accounted for. 33% of your under applied overhead should go to work in process, 67% should go to cost of goods sold, because that's what your ending balances are showing. That's the ratio. Okay, now 33% of 600 is 200, one third, two thirds is 400. I add 200 to my work in process account and it becomes 7600. Similarly, this time I add only 400 to unadjusted balance of cost of goods sold. 14,400 plus 400 gives me 15,200. Okay, so total amount of adjustment I have made is 600. Okay, and the new balance of the three accounts as before, just like here, is 22,800 and I have adjusted it. So the steps are exactly the same. It is just that if you are given, for example, if you were given a number here, suppose this number was just to 3,000, then you will take a ratio of 3,000 divided by the total, figure out the percentage, okay, multiply 600 by it, and then whatever was that number, you'll add it to your account. So procedure remains the same, the table remains the same. It's just that you can expand the example to three accounts, two accounts. This one is simply one account number. This one is a two account number. You can make up numbers and then you can try a three account number, but that's all there is to this chapter as to how to write off the discrepancy between actual and applied overhead to either cost of goods sold or doing a much more elaborate, which is a proration method. I hope you guys are good. Have a great day. I'll see you next time.